Good morning and welcome to Market Outsiders. It's Thursday, July 17th. My name is Namaan. I'm joined by my colleague and co-host Jenny Rae. Jenny Rae, how are you today?
Oh, hi, Naman. I'm good today. I'm pretty excited. When I get toward this part of the week, it's either leftovers part of the week, right, where you kind of like went hard on the cooking early, or it's, rejuvenation week. But I've got big plans for dinner tonight, so I'm pretty psyched. I am working on getting a lot better at cooking meat, and one of my neighbors is just the best smoker in town. So I've gotten some tips from her on tri-tip. So I'm in California. That's our cut. We own it. This is what we do. Tonight's tri-tip night. So pretty psyched about today.
Okay, that sounds good to me. You just got to make it through the next like 12 hours.
Yeah, that's it. That's all I have to do. Some people live for the weekends. I live for tri-tip night.
There
So
you
here
go.
I am. Yeah.
There you go.
How about you? How are
Well,
you today?
I'm doing very well. I'm excited to chat about. Can I just not bury the lead and let
Yeah,
folks know
sure.
what we're going to talk
Let's
about
do
today?
it.
So
Let's
we're
go.
we're going to dive a little bit into PepsiCo. So their earnings just dropped a couple of hours ago. It's 9:35 on the East Coast. Markets just opened. The stock has popped about 7% in the last 5 minutes. And so obviously the street likes what it's seeing in terms of PepsiCo's earnings. So let's dive in a little bit and see what's actually happening inside the business, and we can share our perspective on if we think this share price appreciation is warranted.
I love it. Now, Naman, I know that you have had a direct hand in building some of our kind of market insight reports. We call them industry primers. Do you want to just talk a little bit about the big picture about what's happening in the industry? Because one of the things I like to test myself on is why do I think this is happening before I actually even look into the news? So why do I think that Pepsi's stock price is popping today? And so can you just talk a little bit about what's happening in the kind of consumer food and beverage industry right now? Because I think having some of that high level context might be helpful for folks before we dive into the details on Pepsi. And then I'll share
Y-
that
Yeah,
article.
absolutely. So there's massive consolidation right now happening in the consumer food and beverage space. Well, actually, two macro trends. There's consolidation at the top end. So, you have like three or four major brands that own, all of the sub brands that you would love and have consumed since you were a kid, right? For example, Mondelez owns Oreo, but they also own like four or five or 10 other cookie and cracker brands that you consume. So on like that end, you've got massive consolidation happening, but then you also have these challenger brands erupting that are each taking like 1 to 2% market share. So think of like Dots Pretzels before it was acquired by Hershey.
Have those in my
Uh,
house. Mhm.
there you
Also
go.
Oreos, but yeah.
Think of like Annie's cheese puffs that I just bought from Costco this weekend, right? Like taking like just 1 or 2% of the cheese puff market, right, away from like your biggest player, which would be Cheetos, which is owned by Lay's. And so you have this bifurcation, consolidation on the high end, and then all of these what I would call like more kind of fancy or healthy or unique products that are coming into the market and just taking share on the margin. So, a lot of the marketing that I've seen from those brands are, we don't use food dyes, or we don't use seed oils, or we use these kinds of ingredients, or, we are like locally manufactured. Siete, so I'm based in Austin, Texas. Siete is a brand that was founded here about 30 years ago, and it is all gluten-free tortillas and chips and kind of things like that. And they were just acquired by PepsiCo for $1 billion. And so, but their claim to fame in the Austin market for years and years was, we're from here and we make our stuff here, and you know where it's coming from, and it's family owned, et cetera, et cetera. And so, what you're seeing is that these challenger brands are starting to change the conversation about what it looks like to cater to consumer tastes in this space, and you're seeing an explosion of what I would call the upper middle class, and the data bears this out, and we'll share some of that data in the description. But over the last 30 years, like in the United States, the upper middle class has exploded. And why am I talking about that right now? It means that like at the macro level, disposable income has exploded as well, and you are seeing that people are or enough people are shifting away from your like Oreos to your fancy Oreos, if you will, that are being produced by, some upstart brand. And so what the big guys are doing is
I'll
they are
never pitch me sugar-free organic Oreos. Like honestly, if that's
I
taking share
won't.
from Oreo, let them have it,
Let them have it. Let them have it. Well, maybe it's not sugar free. Maybe there's something more elevated about it that I don't know.
We've
Um,
got we have mint. We actually, specifically to disclose, mint Oreos are the ones that are in our pantry right
okay,
now.
there you go. Oh, we don't have Oreos, so I'm a
We
little bit
don't
out of the
usually.
loop. I'm a little bit out of the loop on what all the variations are right now. But what you have is, the bigger brands now having to make a decision. Like, do we go and compete head to head with some of these upstart challenger brands, or do we just buy them? And what you're seeing right now is a lot of M&A activity in the space. Like, why wouldn't you? And so that's the state of play right now. You're also seeing these brands pay a lot of attention to the health of the consumer because a lot of what we're talking about right now is discretionary spending. Like, I don't need to buy Oreos, I just want to. And so you're seeing a certain segment of the population that is like continuing to spend and continuing to spend on these um, more expensive items. But you're seeing other segments of consumers pull back. And so one of the reasons I pay attention to what Coke and what PepsiCo and what Unilever and Mondelez say on their earnings calls is because they're on the front lines of knowing and understanding what's happening with the consumer right now. And so if you want like maybe a little bit of a heads up on where the economy's heading or what the labor market looks like, I think you can look at the earnings of some of these companies and start to figure out where are people continuing to spend and where are they pulling back. And there's some interesting insights that you can uncover from what these companies are telling us about their customers.
I think that the expectation that brand is a moat is getting a little bit debunked in this space right now. So brand is a moat in general. It doesn't make you go away, but somebody nipping at your heels is a really significant headwind in the business growth. And so what I want to talk about really quickly is just like when we're why do we care? Like why should you know about this, right? Like why do you need to know this to walk into the store and choose whether you buy mint Oreos or Dots pretzels or no, you don't need to know it for that. But if you are in a business context, so first of all, if you're applying this for a case interview, if you're thinking about case studies or case interviews, you have to understand the bigger context because you need to know which levers make sense to pull. And pulling the price lever, increasing your price in a market where fragmenters are taking away some of your share in the first place. That's like it's possible, but it's not often the right move. And so kind of understanding like which of the levers are the first ones to reach for, I think are super important. I think cost is going to be one of the major ones here. The second thing that's also important is when you're thinking about the kind of three major applications that we help companies with, right? We help companies determine strategy sprints. So we do week-long projects inside organizations that are not great at developing strategy, and we help build that strategy muscle internally. We also help people with their communication talent. So how do you directly communicate what it is that you want to say? Here's the thing, like if you communicate exactly what you want to say and it's not what leadership is looking for, it still doesn't matter. So a lot of what we do there is work on alignment and then also project management. So if you're doing project management right now and you're inside one of these major consumer organizations, you are leading M&A, integration, product expansion projects. You're not doing price change projects. So it's also really important to understand the nature of the projects and how that's going to impact all of your planning downstream. So I just want to, but we're going to dive in now to the article. Naman, if there's anything else you want to add about that, that's great. But I just want to make sure you guys understand, like, why should we care, right? We're not just here to repeat news. You can go find that somewhere else. We're here to make sure that you are understanding why getting into a conversation about this and understanding the second and third level of what's going on is actually
Mhm.
really vital.
The only other thing I'll add to that, January, is one of the reasons that these upstart challenger brands have been able to be successful over the last decade plus is because the distribution model has changed. So it used to be that you had to distribute through retail and you had to get shelf space, and that's how you got my attention if I was looking to buy chips or pretzels or cookies. But now you can go direct to consumer, and social media has played a big role in the rise of these challenger brands. And so what they're having to adapt to is not just we have new brands and new products nipping at our heels, but we actually have a new distribution model that's threatening us a little bit as well. And that's the other piece of the story that I'm hoping we can get into a little bit.
Absolutely. Now, look, I think most people still one require those supplier relationships at
100%.
some point. So that still is a moat for some of the big
But that is not
brands.
necessarily a barrier to entry anymore.
Exactly. And because you can produce these without significant scale, right? You can't make NVIDIA chips without some scale, but you can make pretzels in a pretty small facility without scale. You can test demand in a much more nimble way. So that does change the factor as well. I'll pull up the article here, right? So PepsiCo earnings beat estimates even as US demand falls. I think that this is the exact thing that you would look at when you're saying, hey, the market is giving them kudos. High fives all around for PepsiCo this morning. I think you said that the trading had popped by what percent in pre-market
So when
trading?
we started 10 minutes ago, it was 7%. You look at the ticker there right now, it's now down to 6%, but still a meaningful bump.
Meaningful bump, right? So their quarterly earnings and revenue beat Wall Street's expectations. What's the thing? Is PepsiCo's business in a great position? It is not. The kinds of projects that you're still going to be doing are our profitability is falling. Our revenue growth at least is decreasing. We're facing headwinds in the industry. We need to figure out how to revitalize this. We need to figure out how to become better at M&A, category expansion, geographic expansion, all of the different kind of functions of how you operate in an environment like this. But we're getting high fives today because everybody thought we would do worse than we did. Wall Street is an awesome business because you could literally be doing terrible all the way to bankruptcy, but beating expectations every time, and your stock could be, you could find stock bumps at each earnings call. So reiterate the full year outlook. So I just think there's some really interesting color in this article alone. I actually think there are some other great articles in this. So one of the first things that I do when I see an article like that is kind of like, okay, beat estimates, which means that the industry outlook and PepsiCo's outlook was lower than it is, but US demand is falling. So my first thought was, oh, PepsiCo is fine. It's just their US demand that is slowing. So Mexico's fine, Europe is fine, but the US demand is falling. That's kind of what I was trying to pursue when I'm looking down into here. So is that true, right? Is PepsiCo actually up? But U.S. demand is falling, so there are growth areas that are much stronger than the U.S. We talked about Ferrero earlier this month, and in that episode, which we'll link to here, was kind of part of our question was, is there international geography or their U.S. focus kind of one of their primary things? And inside that article for Ferrero, it said they want a stronger foothold in North America. North America is still the white whale in terms of snacks. So right, shares of the company rose roughly 2% in pre-market trading. We're up to 6, 7 at some point. So earnings per share adjusted 2.12, revenue 2.73 versus to 2.27 billion. That by the way is a fairly small swing, right? It's not even $1 billion of a swing. So under 500,000, 500, not 500,000, that wouldn't even make the needle, but 500
500 million.
million, yeah, in revenue changes. But let's look at some of these numbers here. So second quarter net income attributable 1.26 billion, right? 92 cents per share, down from 3.08 billion, excluding restructuring and impairment, right? 2.12 billion. Net sales rose 1% to 2.73 billion. Their organic revenue, which excludes acquisitions, divestitures, increased 2.1%. So net sales 1%, organic revenue,
That's
which
really what I'd be paying
excludes,
attention to.
yeah, right. These are like really interesting. Um, so so what does that mean? Right, their organic revenue is higher than their net sales increase. So what makes up the difference? Well, that means that when you exclude acquisitions, you're actually doing better, right? When you're excluding divestitures, you're actually doing better.
Makes
So
sense.
yeah, so some of those kind of challenges on the net sales side would be something definitely to probe into.
And then you've had
But okay,
currency
go ahead.
fluctuations as well, right?
Mhm.
When you're dealing with a global business, that's one of the reasons I'd like to exclude kind of those exchange rates from the analysis because those are shifting all the time. And you've had the US dollar weaken this year by about 10%. And so sometimes kind of those currency fluctuations can also obscure what's actually going on in a business because they make the numbers look better or worse than they actually are. And so kind of stripping the effects of that out are helpful. I think the real insight that you're probably getting here, look, the volume fell 1.5% globally.
Yeah,
So
right.
if
This is it.
your
So
organic
Pepsi's not in
revenue's
a
up,
good
but your
place. This
volume
is
fell,
yeah.
right? Then it means
Exactly.
they're having to pull the price lever.
Hmm.
And if they're, I would think that your most price insensitive market is the US. So if you raised prices in the US more than you did in the rest of the world, it's no wonder that US demand is falling.
Hmm. And in like here's the thing, like you should adjust prices. Like that is a lever that you should pull. Anybody will know if I've been in a stock pitch or a venture challenge. I'm always the one they're like, oh, we don't want to price too high. We're pricing low to enter markets. I'm like, y'all are not like pull the price lever, pull it early actually, and see if you can test markets at high prices because then you're focused on what I think are the right things, which is how you get your stuff to people and why they should buy it, not here's the cheapest option for you. So if you pull the price lever, you are going to see some of those changes. But look, here's the thing. This 1.5% is not what is the decline for food overall, right? So Pepsi is actually losing share in the food market, is what I would suspect this means. So even in a consolidated market, which you wouldn't expect that to happen in, you would expect that the consolidated players would be the ones gaining the majority of the share. You're seeing the opposite trend, which you highlighted at the top of this call. Naman, what else would you look for when you're thinking
So
about PepsiCo?
So I'd want to know, so what CNBC is doing here, it looks like is they're combining the volume for food and beverage. And I'd want to actually look at food and beverage separately because they are different businesses. And there's different competitive landscapes in food and in beverage. One of the strategic decisions that PepsiCo made, gosh, 40 years ago was that they were going to diversify out of beverages and into food. And now food is a much bigger part of their business. It's something, you know, they were a they were a number two to Coca-Cola in beverages. And, in a duopoly, you don't want to be number two. And so they made a very, they made a very, I think, smart decision to diversify into food. It's become a much bigger part of their business. They,
Well, and not
they,
and that, like not just food, food isn't food, right? Food when they thought of drinks, initially the category was sodas. It's not even only that anymore. Now it's
it's not.
sodas and energy drinks
And
and
health drinks
health drinks
and,
and like you're
hmm
right there, it's kind of
hmm
subcategories. And I think that's part of where they saw the market going. But food was already there, right? It was already pretzels and cookies and crackers and different
Well,
categories of food.
well, and oatmeal and some of those kinds of, right, like
Hmm.
they own Quaker, and so like there's more,
Staples. Mhm.
yeah, there's more staples inside of their portfolio, and so what I'd want to know, number one, is okay, what were the volume trends in food versus beverage, and then which regions drove those differences in volume? Because my guess is that you probably saw volume declines in like North America and Europe and you might have actually seen gains in like Asia Pacific, for example, but those gains weren't enough to offset the overall declines. And so that I'd want the category by category breakdown and the regional breakdown next. And I don't know if CNBC got to that level, but I'm interested to find out.
Right. So you see this, they break it out for food and for drinks, but they don't break it out into any further subcategories, but only for volume, right? So volume fell 1.5% flat for drinks. What we need to really see is where revenue was, because then you can tease
Hmm.
out what of this was price change and what of this was volume change. So we know that volume is down. We know that overall they are seeing this in terms of softer demand, but looking a little bit down further here, right? North American food division volume shrinks 1%. This is great information and a completely incomplete picture. Like we don't know actually what's happening. So they're giving highlight reels without the whole story. If you're going to model up this business, you need all of the information. So you're going to actually have to go straight to the 10Q in order to get that, which is where these numbers are coming from. Domestic drinks, right? Volume fell 2%, although Pepsi was the namesake soda. Have you ever had Pepsi Zero Sugar, by the way?
I'm sure that I have, but I mean, I couldn't tell you the last time I did.
I couldn't either. So yeah, Siete Foods, Sabra, right? Cutting this is it for me. Like I kind of got down here. I was like, look, if I were pulling something, what I'm really trying to do is actually cut costs and trying to improve profit margins. And this has led to one of the most common kind of phenomenons inside the industry in the last decade, which is called shrinkflation. If you don't know what shrinkflation
Hmm.
is, it's really important to understand this. But like one way that you cut costs is on a per package basis. When the package of Oreos was 350, Originally, it had 100 Oreos in it, and now it has 75 Oreos in it, but you still charge 350 for it. So you're not you're technically pulling the price lever, but it doesn't feel to the consumer like you're pulling the price lever in the same way because the consumer is not often savvy enough to make that prior to current comparison of the differences. Right, the company closed two manufacturing plants for North American food. That's going the opposite direction from businesses like Ferrero, right? They're also trying to make their transportation and logistics more efficient. So what are they doing? Like they're recognizing that they're in a functionally a cyclical decline, Naman. And in a cyclical decline, you like have to outcompete people, but also like you have to become a lean operator. Otherwise, you're headed out of business. Like there isn't another way to survive in a business that's headed this direction right now.
And when I read this, like I just think supply chain, like that's what all this is. And so, like there's a lot of just trade uncertainty right now in the world, and so I think this is what PepsiCo is saying without saying it is, hey, like we need to rethink our supply chains. We need to rethink some of our sourcing. We need to like add automation to our transportation and logistics processes. We need to maybe divest from two plants so that we can reinvest into making like the plants that remain like more like smart factories, right? Like I think when I read that paragraph, like that's some of the detail that I'm adding in terms of like what I'd be thinking about if I was actually at the company.
Agreed. But I do think that it's really interesting. Look at the end commentary here. It reiterated its full year outlook. It still expects its core constant currency earnings per share to be roughly unchanged and organic revenue to grow by a low single digit percentage. What does that mean? It means that they're expecting, a low revenue growth. So what is the cost cutting also for? It's in an environment of rising costs. Right. So they're not just doing it in order to actually improve profitability. They don't expect to. What they're really doing is that they're
They're
it's
hoping to stay
salvation.
flat.
It's, yeah, like so they're like as costs are rising, they're trying to pull out that same amount of cost
Hmm.
from the business so that they can maintain earnings. So I've studied Pepsi in case studies in business school at Columbia. I've studied Pepsi when I was at Bain because I was in Atlanta, and so we obviously did work for the other guy. But like this is very interesting because at the time Pepsi was like the new kid on the block and a big concern inside the space. And so looking for pockets of growth and pockets of opportunity. I think it would be a very hard job to be the CEO of Pepsi right now.
I've often thought when I've looked at Pepsi, you almost have to make a decision. Are we a are we a beverage company or a food company? And then are we North America focused or are we not? And because you're really running like 25 businesses in one
Mhm.
that all have that are all catering to different consumer tastes in different parts of the world at different price points, that all have different supply chains, that are all dealing with different kinds of uh, geopolitical pressure. Like it would be an incredibly difficult job, like you said, to be the CEO of Pepsi. Um, so I'm going to be interested now to see what Coca-Cola's earnings look like,
Mhm.
what Unilever and Mondelez's earnings look like, and some of these other CPG brands that are about to report, just to see if some of what we're seeing at Pepsi is a Pepsi problem or if it's a
Mhm.
market problem. And that would be one of my next steps, as I continue to look at the space, is trying to figure out what's market wide and what's company specific.
Look, nobody's interested in running away from a challenge, and Pepsi is still a phenomenal company, and has done like to operate from that number two in drinks perspective, from a marketing, a category expansion, an M&A process. It's just phenomenal. I'm just thinking that in terms of the life cycle of Pepsi, this is one of the most challenging moments that Pepsi has faced in its life cycle. Like you said, disruption from these upstart brands is changing the game. They're also large. And so from my understanding, there are individual marketing teams inside each of the brands. There's also kind of a master marketing team. That kind of fragmentation in terms of ideation and process can become very cumbersome inside brands like that. So just maintaining lean, clear communication, at like, nimble marketing, effectively measured marketing in an environment like this one is challenging. And then building up
Hmm.
your consistent acquisition capability. I think Pepsi's probably been better at buying companies than integrating them. I saw that all the time at Bain. And so, there are so many things that I'd want to look at if I really wanted to go understand Pepsi
Hmm.
more. So if you're looking for something to do this weekend, I've got tri-tip, you've got an assignment. Let's do this.
Two last things I'll mention, and this is something that I'd want to go validate, but when I think about these businesses, I think of the beverage segment as being higher margin than the food segment. And so the fact that, your volumes are dropping more in beverage than food is concerning from a margin perspective. That's number one. And then number two, I just kind of looked up some of this geographical shift in the 10Q, and what I found, and I'll just share it very, very briefly,
Sure.
is that they saw volume growth in Latin America and Asia Pacific, but that was offset by lower food volumes
You're
in
just saying
Europe.
that so you make sure you sound smart, right, Naman?
Europe, Middle East, and Africa were down. Right. So on
Interesting.
top of
Yeah.
North America, it was North America, Europe, Middle East, Africa down, Asia Pacific, Latin America up. And so kind of my next step would be right to go to figure out, okay, what were like the volume declines in or increases in each market. The other thing I think about is that you typically have lower pricing power in Asia Pacific and Latin America. And so you have volume rising in markets where you can charge less. And so obviously that's going to compress margins as well.
Super interesting. Yeah, the if you think about them long term, you could assume that maybe Africa, Middle East, Asia, Europe have lower population growth. So you probably, if you want to win in certain categories, you probably want to be in the places where population growth is growing. Because if you're maintaining margins, which Pepsi has historically been quite good at with volume expansion, then those are the kinds of markets that you want to be in. But like you mentioned, if price is the lever that you've been pulling, you can't pull it in those core markets. You've backed yourself up against a wall a little bit. Now I feel hungry. I haven't had breakfast yet. Naman, what
Me
should I
neither.
reach for? A little bit of Quaker Oats, maybe?
There you go. Quaker Oats or some Frito-Lays.
No, I live in a house of boys. I'm sure that I've got my one who's turning to be a teenager next week. I'm sure that that will happen, but today is not the day. So, thanks everybody. We hope that you enjoyed this conversation. Looking forward to diving into future businesses with you. We've gotten a couple of suggestions from you this week, and we're looking forward to featuring those on a future